It's Monday, February 3rd, 2025. Quick minute video for you wonderful ladies and gentlemen. I can't believe we're in February already. Market had a bit of a routing this morning, but ultimately the dip got bought. Overnight inventory was heavily short, and I think the media is liking to hype up the trade war fears because they are very political and biased. The truth about the Trump tariffs is he's not looking for a trade war. He's looking to firm up the borders in both Mexico and in Canada, and also to get more goods into Canada. And less than a day into the trade war, quote unquote, both countries caved, and apparently Colombia did now also. As far as the implications for markets have been in this sort of wild, big swing range where it looks really good at the highs and looks really bad at the lows, but ultimately we're in this big range. I have been of the opinion that we will see this for a while. I, of course, reserve the right to change my mind if and when price action changes and we clear both levels either on the upside or downside. But as of now, that thesis has worked. We've seen continuation of weakness in some of the big names, particularly Apple. We'll get to that in a minute. In regard to volatility, we have not been able to get over and stay up over 19.36. If we do, that's the vestibule for 22s, 23s, and if we can clear 23.76 and hold, we could be in for a much larger leg lower. As of now, I still think we are in this same volatility chop range. With regard to futures, we did see that big liquidation break and a subsequent bounce back. We are coming back down a little bit in the after hours. The must-hold levels, in my view, in the ES are 59, 93, 75, and we must get back up over 60, 50, 75. We stalled today at the 200 MA 30 minute. Generally, I like to be short markets that are below 200 MA 30 minutes or flat, and or long above 200 MA 30 minutes on dips. Right now, we are pulling back. I'd say that this 6,000-ish area to 59, 93, 75 needs to hold. If not, we could retest the lows. Anything that sustains below 59, 50 quarter, I think could still see lower prices. If we repair the underwater close from the Friday session, that would take us back up to 61.05 half. That is the must clear and then must hold. I'd feel much better about the market if it can hold 6,100. With regard to the Qs, similar setup there, but the bulls there need to clear 21,779 quarter. The pullback was okay. It stalled a little bit above the 200 MA 30 minute. I generally like that rule. If we can clear 200 MA 30 minutes and we can clear said fib levels, in the ES that's 6,100, in the Qs it's 21,779 quarter. Anything below there to me risks sideways to lower, and in the Qs anything below 21,572 is still weaker. With regard to SPY, we also saw that gap down, obviously. We were able to fill in the 116 gap fill to 591.64 and bounce. We're roughly over the 50% fib and then closed over the 61.8. So what now? Bulls will need to hold that 61.8 20 MA confluence right around here at 596.19. We're a little below there in the overnight session, but anything below there I think does risk the move down to 592.21. And if that can hold, we could fill in the 114 gap to 582.19, and then we'd see we bounced roughly where we were supposed to and closed roughly around the 50-day moving average. It would not surprise me to see the gap fill to 601.82. 601.85 is the 78.6 of the range. That could act as resistance now. If the bulls can clear and hold there, I think they're into some good solid territory. We have now had 3 look above and fails of the 609.07. We should technically rotate down to range low, depending on how you measure that. That could be anywhere from 580 half down to 575.35, and then we would see. With regard to the Qs, obviously there's some mixed price action in the big cap tech names. I think that the bulls here will at the very least need to clear 519.42 and hold. That is, of course, the 50% fib of the range, and then we could see some resistance at 524.08. Anything below 514.77, which is the 38.2, risks a move still lower back down to the 505.08, which is, of course, the 114 gap fill. With regard to Apple, we did get the bounce post-earnings. We got over the 244.54, which was the 61.8 on the upside. Remember, we held the 61.8 on the downside in the 220 area, 219 area, and we bounced, so that symmetry has been fulfilled. We have now been pulling back. We're roughly a little bit below the trend line here. and a little bit below the 10 MA, which is a little problematic. So the bulls will need to get over 230.20 to kind of re-engage on the upside. I would say rallies to 239.74 to 240 are probably sellable, at least until they're not. On the downside, the 200 MA is now down near those 219, so that area needs to hold. I think if that fails, we could see 213.92, 209.72, and maybe have a retest into the 196s to 199s. That area had been a lot of prior resistance and now should act as some support. I don't necessarily know if we're going to get down there, but I told you before, a move off the highs could take us down to maybe even as much as 182s, which would be about a 30% correction. Usually Apple corrects into the mid-teens, and if it goes past that, it's usually into the low 30s. Nvidia pulling back, of course, started on that DeepSeek plunge 127 gap last Monday. We did actually have a move below range that seems to be failing, although that is a little dubious with futures on the downside. I have alert set below today's low of day, 113.01. If that fails, I think there is a press on the short, probably for a move down to 100. I do think somewhere between 90 and 100 will wind up being some support, though. We are on channel low, so it's not a given. If we have a higher low tomorrow and can clear 118.57, I do think there's a bounce to the 122.64 200 MA. Meta has been fairly strong. Usually we see Meta and Google go the same way on the first set of numbers, and then Google or Meta will go the opposite on the second set of numbers. So Meta was up, Google went up. It could be the opposite now with Google going down on their report after the close. Generally, I think it's still prudent to book some profits into the 710 level. We may make a move up into the 772s and 776 level. Meta still looks good, but I'd be a little careful up here if the general market does start rolling over. Netflix has looked pretty strong also. I'm generally bullish on that. Anything that remains over 968.01 to me remains bullish. I think you could raise stops now, though, to 964.38 low of day. If we can clear 999, I think we go up to the 1006 and maybe even take a run at the 1049, 1050-ish level. Tesla has been a little bit weak lately. It had a bounce on earnings, but the bounce didn't clear the level we needed to see at 430.79. We're retesting most recent low at 373.04. That area needs to hold. If it doesn't, we come back down to the 358.64 to 350.32 breakout zone, and then that is the next must hold. Bitcoin has been sort of okay, although we did see a pretty nasty plunge this morning. We have kind of dual bodies here. Today's rally got us back up to the 10 MA, and now we're stalling there in the next session. Bulls will need to clear that 10 MA at 102,756 and falling. Anything below the 50 MA, which we are now a little in the after hours, at 98,730 is a little bit more bearish. I think anything below 97,404 to me is likely a short if that can't hold. If we can get over that high of day in the second session, which is today, 102,615, we would be over two candle body highs, and I think we could make a run back up to the 107,000, 108,000. We had the look above and fail of 108,960, and that is still in play at the moment. Gold has been acting fairly well. We actually had another topping tail today. Don't let it get below 258.95 on you. The next big upside level could be the 2 times range of the failed head and shoulders. Depending how you draw it, if you're conservative and you use the left shoulder, it would be 274.78 and the 2.618 would be 285.33. TLT did get a little bit of a run, but is sagging a little bit in the overnight. I think that if it's below the 20 MA at 87.08, that becomes a little bit problematic. I'd get bullish over the 50 MA at 89.29. Generally speaking, we have seen this push me, pull you situation where gap ups have been getting sold into a little bit and gap downs have been getting bought. I do think that there is some rotation coming out of the market here. February is often a weak month after a strong January. We're really not that far off the all-time highs, so it is possible February picks up and then we have a performance chase into March. But I think if we do have a weak February, we will likely get a rebound in March for end of quarter window dressing. I think that moves in upsides situations that can't clear highs and we have look above and fails can rotate lower. I also think we will likely see some look below and fail situations that can't get lower and will rotate higher. I generally think we're into a consolidation zone and it could be large for a while. Like and follow for more.